Everything you see here is strictly informational. This is not a channel for you to be taking financial advice from. I am not a financial advisor. I am not a broker. I am just a person that is here recording my journey about learning the markets along the way. So please do not consider me a financial advisor. Do not risk any more money than what you have. Do not be borrowing other people's money. Do not do anything stupid that you're going to regret later with your money. Hey guys, how's it going? Bodies and Wicks today. Let's see here. If you don't know, then you know. A lot to go through today. Last week was a crazy week, especially with the euro pressing up really hard against most currencies, especially U.S. dollar and Japanese yen. The British pound had some good moments as well. The dollar failing, and the rest were just kind of mediocre. So I'm going to be taking a look at some indices, primarily SPX, as well as we'll go over some primarily the euro, because I think that's what we're going to be watching out for this week. I think you should too. I think any other pair is going to be kind of, you might get some scalps here and there, but if you're wanting to catch some big moves, I suggest looking at some good levels for the euro. Got my monster in hand. Shouldn't drink these things. These things are horrible. I don't know if you ever saw that video where they like put it on bread and whatever, and it kind of, you can bend bread however you want to. But evidently there's some chemicals in these things that you probably shouldn't drink. Not endorsed by Monster, by the way. So, anyway, let's get to the charts, and we'll see what we can do in as quick amount of time as possible. All right, so first, what I have is S&P. Now, what I found interesting about S&P is that we have taken forever to cross this, or at least close above this 32.23, 32.24 mark here. As you can see, since back as December of last year, this is the weekly chart. This is kind of, once we got across it, we stayed across it, and it acted as a support throughout most of the time until, we got news of COVID. After news of COVID, everything broke. We came back up to this line. It tested it, came back down, and then we've tested it, stayed under it. Even last week, we broke above it, but then we still closed below this strange line, right? This 32.24.4. Let me see what the close was on this. Close was, 32.13.7. And around here, let's see here. Close was 32.31. Open 32.31. And let's go back here. Open 32.36. Close 32.35. Low 32.20. Close 32.36. Open 32.24. So there's that 32.24 where it begins this the support level, because here on the close was 32.24, 4.4. So this is that level, and you can see it comes up to it, touches it. Here we close at 32.22. Here we open at 32.28 or 32.22. So close below that, and this is the first time that we have been able to close above that 32.22, 32.24 mark in a very long time. So because of that, let's drill in here a little bit closer. And here's the line, and as you can see, it acted as especially support for these last 4 hours. I want to say it was the last hour of the day on Friday. No, it was the last 4 hours on Friday. As soon as it hit this 32.24, I honestly thought it was going to stay below it. I didn't think we were going to be closing below that 32.24 that's been holding us back for quite some time. But instead, it rejected right off that 32.24 and continued higher. What does that mean for the rest of the week? We'll probably see a pullback, considering the divergence that we saw in the 4 hour. So let's go to the 4 hour and let's auto this. So from here to here, as you can see, the divergence here on the RSI. And generally what that means, especially on the, I think of the RSI is going to be that first full pullback, right? We did get that first full pullback right here. Now we don't see much in the RSI happening from here to here. So I don't really think we're going to see a huge pullback to start the week. I think we are probably going to see a massive increase, to be honest. I think we're probably going to open up in a gap. Market opens in about an hour. It is 2:53 Central Time here. I think we're going to open up in a gap. And then, if anything, we may come down and this may act as a resistance again. However, I don't think so. I think we're going to have some new key layers of existence that are going to be resistance. So I watched it most of the day Friday because I was trying to play the S&P, and it was hard to figure out. It was hard to figure out what it was going to do because throughout all last night it stayed above this as a resistance. Then it kind of came down, and then during the middle of the day, I kind of thought maybe this 32.50 level would act as a resistance. It didn't. It went straight through that. And then when I was hoping for it to get down to the 32.20, 32.15 level, so that way I could, catch a buy and go up. But I wasn't thinking into the effect of that weekly 32.24, and that's exactly what it had hit and bounced off of and went exactly the opposite direction. So with the S&P, I see more bullish moves coming this week, considering we've had a good couple weeks of just sideways consolidation. We've had some big moves throughout the week, but nothing that would signify a good change, I guess you could say, as far as closing for the week until this week. So the last couple of weeks we closed down. We closed underneath this 32.24. Like last week we did this, and then we closed down here, and then this week we started and we did a couple things, and we finally closed above this 32.24, 32.77. Now I think the biggest level to hit that we're going to be looking for is the 3300. And I think once we get to that main level of resistance, dating back to early pre-COVID, I think it's 3240 or something like that, or 3400, somewhere around there. That's probably where we're going to see some heavy resistance. But until then, we do have a pretty defined trend line going upwards. Now, to see this trend line going upwards forever is, again, as I explained last week, very, very, very naive. We're not going to see this type of growth, especially if we keep seeing the COVID numbers come up. But there are some positive things coming out of COVID. So, and I think that was primarily the reason for the huge, huge push at the last couple hours, with Kodak, getting some favorites from the government. As well as the president pushing back against Big Pharma. I don't know if you saw about what he said against Pfizer, but basically Pfizer is looking really, really bad, saying that they're going to reconsider distribution and manufacturing in the U.S. if the president puts these executive orders into play, which would basically hinder Pfizer's profits, and that's what they're thinking about. So it was a political play, to make Big Pharma look bad, and it sure enough did. So now, and the thing is that basically what we're saying that is with Pfizer and Kodak and everybody coming into play with all these treatments and whatever. And Pfizer just kind of said, you know, we don't really. Basically, the president said we'd cover the cost of anything. You know, he's trying to bring manufacturing and distribution back home. And I'm not for sure what Pfizer's reasoning for not bringing it back to the United States was, just because of government sanctions, and I wouldn't say sanctions, but the executive order. But basically saying, it was going to be paid for, by the government for the U.S. people. So I am not for sure why Pfizer was so upset about it, because there's, U.S. is still going to be footing the bill. Unfortunately, the taxpayer is going to be footing the bill for that. But that's what we have in the news. Speaking of news, what we should do also is check out what's going to be happening this week in Forex Factory. Make sure this is pulled up. It is. So let's see what we have going on today. So there is nothing going on today as far as the Asian market is concerned tonight. Tomorrow, what we have, maybe some U.S. stuff, some manufacturing PMI. If it turns out better, it could push the currency up, which is what we'd be hoping for. And Australian dollar, which I'm not too worried about. I'm not going to go over Aussie pairs or NZD pairs, just because a lot of them have been acting sideways. Let's see, August 4th, we have more NZD. August 5th, we have some USD things, some non-manufacturing PMI, crude oil inventory, so that could be a crucial thing to look out for if you're interested in trading some WTI, WTC. But there's not a whole lot of news this week, and it looks like until we get toward the end of the week. Thursday we have quite a few things affecting the pound, and Friday we have some things that will be affecting the Canadian dollar as well as the US dollar. Our average hourly earnings, that'd be interesting to see, to be honest. Looks like we have non-farm employment change, not payroll, but employment change. Let's see here. Okay, so that's a look at the week ahead. Now that we looked at the S&P, I'm going to do gold. Well, let's go ahead and do gold, because I wanted to draw out gold with you guys. I've got it set on the 4-hour. It has been, my last week, I had this thing put in a channel, probably looking something like, I know it dated as far back as December of last year. And I've got it on here. Pull this back a little. The big dip right there is considered the COVID dip. I really don't consider anything that has to do with COVID-19 as far as the natural market is concerned. Well, I don't think that's necessarily correct either. But anyways, we did have this upward channel, that we had been going in for most of the year. And you can definitely see it on the top channel here as it crossed. Definitely had these 3 touches here. And last week it was at the very top of these channels, right? So last week it was like right around here, and it was pushing the top of these channels. And then as Sunday came, it just blew it out of the park and went right outside these channels. So let's dig in a little bit further and see what happened with COVID now. Not COVID, but with gold. Now what's happening with gold is we have this little, well, of course we broke the record, which was I think around 1920, which is now serving as a probably pretty decent, I think it's right around here, probably serving as a pretty decent support right now. Somebody caught this 1909 right here, now riding this wave up. But what we do see is kind of an ascending wedge. I wouldn't say an ascending wedge because we do have some sideways motion, but we're not seeing it making any lower lows. I have this orange dotted line going across signifying the highs. We haven't been able to beat these highs. However, we're not really getting any lower lows. So we're looking at a classic squeeze play. Now, that being said, look at the divergence. The divergence is also showing a little bit of weakness. So we could see, I mean, even though I'm very, very bullish on this, I don't think we're going to see a reversal. Sometimes to me, what the RSI represents is that you're going to see an initial kind of pullback, which I think kind of what happened right in this area. We kind of had this little pullback here, right, because the RSI was a little bit too high. It came back up to probably about the right amount of strength, right around that 70 level. And then it continued to push upwards. So now we're back at that 70 level, which is, that's, 50, I guess you could say, is the perfect amount of strength, or whatever you want to say. 70's getting high, but 70 also means that there's a lot of strength behind it. So what you could probably see, I didn't really take a whole lot of trades on gold this weekend just because it was a little bit too volatile. Not volatile, but too iffy. You never knew if you were going to get the complete full huge pullback into, the 1800s. What I'm saying is that you're still going to be bullish on this. I think maybe we're going to see a pullback. I don't necessarily think of trend lines as being the end-all be-all, but we could see a good pullback to a trend line, possibly this last down 4-hour candle, maybe somewhere around there, and then a shoot back up. But I do expect gold to continue the way it's going, especially if the dollar is going to continue falling. If the dollar doesn't continue falling, we may see a little bit of a pullback. Speaking of the dollar, let's take a look at that. We have been talking about either a breakout for a breakdown or a completely false breakout. So I have drawn in the weekly 2 different trend lines here. These stemming back to 2014 levels, 2011 levels, something like that, where the dollar was pretty low. Going across this one that hit in 2014. This is the one that it hasn't crossed yet. Now, if you want to draw the one that goes from the 2014 to the low to in 2018, yeah, we've definitely crossed that one. So this is where a lot of people see this and they think, oh no, we're going to be breaking out. Well, I don't necessarily think so. I think we may be looking at this trend line, could be possibly getting close to it, because we did back up at the end of the day. So we could be seeing a reversal in the dollar. And if that's the case, a lot of these things could be changing. Speaking of that, let's go ahead and take a look at the Euro USD. Sorry for all the drawings, but I wanted to get this in place before I wanted to share this with you. Now, the Euro USD, let's see here, if we draw a weekly trend line dating all the way back to 2008, where it was the highest, right? We get this thing going all the way down, and we drill in. Let's just go into the hour, and let's just go auto. This is that trend line here, this white line. Now we broke above it, right, and we came back down below it. So I do believe we are in a false breakout. If we take a look at, let's go with the 4-hour, you can kind of see this strong move upwards. Now, the strong move upwards, and we're seeing this pullback. A lot of people are wondering how far it's going to pull back. Well, when I look at pullbacks, I look at 2 different things. I get most of my information from, or at least I've learned from smart money traders. Anything that's going to be below 50% from like a current trend or a current situation, and throughout most of here, throughout this consolidation period, we draw our fib from the bottom of that consolidation period to top of what happens here. you're looking at two separate order blocks, right? And these order blocks that have been unmitigated. And what I mean by unmitigated is I mean that price has not came down, touched it, and then retested it and moved. Now here is one order block here. The top of it is somewhere around 162 or 1.16268. Now that one is entirely above the 50% line. This is not a discount, considering most people who have put in positions down here, they're not going to want to buy up here because that's not considered a discount to them. However, there is this order block in here. The top of it, I want to say, is somewhere around 1.14697, I think is where I drew the top of that from. Sorry, there's a lot of lines in here, but yeah, 1.14697 is about the top of that. It is also, if you look at these trend lines here, if you go from this trend line to the top of that, that has not been tested. If you look at these other trend lines, from the top of here at this, whenever this happened back in early June, and you kind of had this struggle here, it made a double top. Once it broke through, and I call it the blue trend line here, it broke through that. It came back and retested that blue, right? Then you have another trend line, the gold trend line. It broke through that one, came back, retested that gold trend line, and continued upward. Kind of had a struggle with the current, or this 1.14697 level, which is where this other trend line is. Had a struggle with that. Then it completely took off out of that, and we haven't seen really any kind of pullback since. So my personal belief is that with this false breakout, we should see some kind of, it'll pull back, maybe it'll play around somewhere in these consolidation levels, probably jump back down, probably play around a consolidation level here, pull back all the way back down to this 1.14697 level, which is also the 0.618 retracement. I think that is going to be your best position to put yourself into buy and go forward. Like I said, it's some people are speculating it could just, we could be right at the buying moment because we're retesting this area. Well, we're kind of dropping below it, and maybe if anything we could be retesting this, but there's so many unmitigated points right now that the bankers are still holding positions in on the down level on a sell. Like right through here, bankers are still holding positions on a sell, right? So you have to think about how a bank wants this done. A bank is going to try to manipulate you into pushing this market down, at least until we get this area to where they can release that sell, right, and then buy, right? They sell to buy and buy to sell, right? This one has already been mitigated, as you can see, this long candle down right here. Let me see if I can draw it out for you. Long candle down right here, and then it mitigated this. So there was another red candle down here that was pushing down, right? So the banks held that position. It came back up. They made a little sell. It came back down. They were able to reach the sell position, let go of that sell position, and then buy and got out of there, right? And then now same thing here. They're putting in order, sell, buy, sell, buy, sell, buy, and then once they got done, completely got out of there. And if we want to, I'm gonna remove these boxes here really quick, and if we want to put like a small fib on from here to about here, or maybe to about here, so from one mitigation spot to another mitigation spot, right in the middle as you have your 50%. That is going to be probably somewhere where they're going to be looking at as a discounted price to where they can buy again unmitigated. However, I still think that's too high. Even though this is a very bullish move, I do think that people are probably going to have, thinking this is bullish, they're going to have their their orders put right here, stop losses just below it. I think we're going to kind of blow through these, and we're going to get to this one. We're going to get to this one right here, and this is going to be the one that they're going to be like, okay, this is a good discount price for us near the 618 level. We have a lot of sell positions in this area. We can rip through these and get rid of our sell positions to get to this one and then buy, and we're going to make much more money in getting to this position and then buying and then taking out of the park and moving up forward. The thing is that we've already crossed, you know, this major trend line. I think we'll probably do it again. However, this false breakout, you know, will pull us back down just to push us back up and get us up and over that. I don't think we're going to stay in this trend line, this weekly trend line that we've had. If we go back to the weekly, I don't think we're going to stay in this major trend line forever. I just think the euro is having too much power, and eventually we're going to kind of get out of it. Hopefully we're able to follow along with that. Next up, I'm going to go with the euro JPY, and I probably should have pulled this back a little bit further, but I don't think it really matters. Well, because of right now, if we're looking at this one, right, we're looking at the most recent trend right now, that the euro versus the yen, it did break out of this trend, right? So because we are up out of this trend, I do want to kind of go back and go to the major one up here. Let's put this right here, and the first one that we're going to hit is probably this one. So the thing is that we are still below that major true one. So the same could be said about the other one. We broke it. I would expect a retracement of some sort, and I think I have it marked in here. So let's drill in a little bit closer to the 4 hour. And if we're looking at a discounted price, again, here we have an unmitigated zone. Maybe not so much, because we do have this that come down here, did touch this wick, came out. However, there's really not much of a order block through here. I see much more of an order block in this area than anything. However, we could, you know, see this as a resistance. My bad. We could see this area as a resistance, and we could completely see it play off this 124.28 level and then continue on. However, I think that's kind of like a retail perspective. I think a lot of people are expecting it to do that. I think with the banks are going to push this down forward. They're going to buy somewhere in between the 618 and 71 level. Because that's where the mitigation is going to start for this order block. And they're going to get rid of these selling positions that they're still holding in here, right? Because these they could have got out of as this moved forward, right? These selling or these down positions they could have got out of as they're moving forward. Who knows? It could be coming all the way back down to this area here, which that's one thing I am also looking at and kind of being afraid of. Is that these two, let's put this a little bit of a different color, a lighter color here. In this area, this 1, 2, 3, 3, 2, 3 area, we have two bullish down candles. However, this one has been mitigated. So if you could see this bearish candle come down, bullish candle came back up. You usually see a retracement of about 50%, which we did move forward. So I think this one has been mitigated. Same thing here, you come back down, you have a bearish candle, you move out of the area, you come back down, then you'll see this be mitigated. So by mitigation means the position has reached the down candle to where they could have initially said had to sell, forced everybody else to sell, and so they're still holding a position up in the top of this bearish candle. So now it comes back down. They release those positions. They buy, they sell to buy, basically, and now they are on. They made that profit by releasing those sell positions that they were holding, and now they are still holding some sell positions in here, which is why I believe it's going to come back down at least into this, in between this 618 and 71 zone. And I think that's where we're going to see the sell, or the buy, I mean, sorry, we're going to see the buy. Now, because of that, we are still in between these two zones, these two trend lines. I do believe what we will see is once it does come back down to here, right, get into this buy zone, take off, we'll probably see some kind of reaction off of this major trend line here. But you know, that's just me. If we see any other, you know, major resistance levels, I don't think I have seen too many. Right now, I just think we are at one. And I think that resistance level, like I just said, going to be putting up right through here, which, you know, it's not going to be exactly at this time. It's going to take some time to move up in that position. I would expect it to happen right over in this area here, primarily because, one, that is where the trend line is. Two, that is also where another key major area of resistance is. They're both probably going to hit at the exact same time, and then you'll probably have a retracement. I don't know, we'll have to see how far the retracement is going to be, but I do see that as most likely the possibility for Euro JPY. Now, with pound versus the dollar, there's really not much going on here. Especially when we look at the weekly. The reason I wanted to look at these is because the pound and the euro both were having a good week, especially the euro versus the dollar. That's one to watch out for. The pound versus the dollar now. Now this trend line here, this white trend line, is basically a weekly trend line going up from the stop. We are nowhere near that. We are encountering some resistance from this here back from March, right? So we're encountering resistance here, pulling backwards. We, again, same thing as the euro, we have had no mitigation as far as some of these order blocks are concerned. No real retests of trend lines as far as this one is concerned. So if we did it, you know, from here to here, there has really not been a retest. So I do believe we're going to see it come down. That's why I believe I have this marked off as orange. This could be an alert, alert for me to buy somewhere around the last down candle around here. So again, it's going to be around the 50% mark. So I do think it's going to take some time to come down. Get past here, we're probably going to see it hit this last down candle on the 4 hour, because that's what happened earlier last week, was that you had these institutional candles, right? Institutional candles, and then you had this one that just kind of touched this institutional candle here, and then it took off. So they were mitigating their positions. They're still possibly holding a down position here or a sell position here that they're going to have to mitigate, right? So if they're going to have to mitigate this, they could be losing out on a lot of money. It could be coming all the way back down to here. If not, hopefully they're going to try to find a different mitigation point. It could be this zone here, right? Could be that zone there that they could be mitigating. I don't think so though, just because of the way this whole thing is put together. It's not really in a discounted rate, right? So I mean, unless you want to say, okay, they've probably, since they have mitigated that, you could throw this here, right? And then what we'll do is we will take this here. And in that case, this actually does look more like the scenario. So this is below the 50% line. This could be another 618 tracement. So you know what? I'm actually going to change my mind and say, well, I don't know why this is here. Should be a little bit more around here. It could be right at this 50% line, which is going to be considered, discount prices for anybody who has, held these positions. But if they're getting out of these mitigated positions, which they did, they got out of here, they got out of here, they're still holding here, they're going to look for a discount from holding these mitigated positions from here. So if they're going to be doing that, then I would expect a retracement at least below the 50 to here. I would say this is going to be your target right here. So let's go ahead and throw a horizontal line here, probably there. So I would say your 1.28839 is going to be your level in which they are probably going to start buying from again. So I'd say wait for this sell-off all the way down to here before putting in a buy position. All right. Now let's go to the euro pound. These are the ones that I'm going to be focusing on this week. I'm not going to be considered with the Australian dollar, New Zealand dollar, not really the franc, maybe some pairs with the yen, but I'm going to focus mainly on the euro, the pound, and the dollar, just because of what had happened toward the end of the month, and I think that's probably where we're going to have our best ideas from. So now with the euro and the pound, not much is happening. It's very, very sideways. So there's really not much to call from here. As you can see, there is a bit of an uptrend. Now if we want to dig in a little bit closer, we do have this kind of channel. We had the sideways motion that was happening back in March, kind of pulled out. This had this line that was acting as a resistance, turned out to be support, and now we are in this channel moving upwards. We did have this red line as the divergence, which pushed this down. It pushed it down to the bottom of the channel. I think at the very opening of the day, which could be very soon, we're most likely going to see a buy against from the euro against the British pound, and it will probably continually move forward in this channel. That's what I see, just because they both have a lot of strength. They're going to be battling each other, and I think it's kind of going to be going in this upward motion. British pound versus the yen. Let's go back here. Let's go with the week. This has been interesting as well. If you take a look at the major trend line here in the white, it has not been broken. Once I drill a little bit closer, I'll let you know. So now that we haven't broken the major trend line, we have a minor trend line here in the yellow. Let's get it down to the day, get a little bit closer look at this. So that trend line started here. And if we go to the first one, it hits here, right around this area, right? Now we haven't broken that level as well. So now we have a third trend line as far as the resistance goes. The blue line here going from here, touching here. This one we did break, right? So we did break, and it did close above that in a daily sense. Also a weekly sense as well. So because of that, I think we may see a push upwards, maybe to get to this resistance. You're also looking at this right here coming across as far as a resistance level. This 1.39.725. You could be seeing it push upwards to that right before it comes back down. However, if you want to look at the mitigation that happened, similar to others, right? You have these order blocks here, right? Let me turn it off. This kind of had these order blocks here, right? And then after the order blocks were over, then you had the mitigation, right? Mitigation pushed it up, but then you still had another order block that happened right through here. If I could get it to actually order block for me, there we go. So you kind of had like these order blocks through here, Again, pushed it up and out, came back down, mitigated it, and then now we are back up and out of here. Now the thing is that we do have some order block areas here that have not been mitigated, right? So these are the areas that I am looking at. Again, it's a 618 retracement below the 50 level, right? So I mark this as the 50 level because that could be the first point that you're going to be looking at as far as you know, trying to buy, because they're going to be looking at discounts. Anything below the 50% level is going to be a discount, and that's the most previous wave, correct? So that's, you know, some of the ones I've done, I've retraced, and I said, you know what, they're probably going to be looking at this type of wave because they've already mitigated all these. They've already got out of their positions, their sell positions to buy, so they're still going to be looking to take this long. However, they're still holding sell positions, right? And if they're still holding sell positions in some of these areas, they're going to be looking to buy. So one of them, I don't think this is a significant sell position area. Again, it could be right here, right at this 0.5 level, just because that's where that last down candle is before it completely shot up and out. And it did not mitigate these areas here, right? So if we take this and pull this all the way across, we do not see any candle come down and mitigate this yet. So I do think we could see this come down. Let's see if I can't get the airbrush here. I do think we probably will see this come down, even though we did break this trend line. Who knows? We could see a bounce off the trend line. I don't think so. I think breaking it, you know, kind of shows that it's not strong enough to hold us back. There really was no struggle, I guess you could say, against this trend line. It just kind of went right through it, right? So I think this trend line kind of is meaningless. So I'm going to get rid of this blue trend line here. What we would see, I do believe, is we're going to see a retracement down to this 50 mark. More so, I think, again, in between this 618 and this 71. More than likely the 618, because that is exactly where this this last sell candle is. They're holding positions. Who knows? It could be coming all the way back down. I mean, if you look at these other ones, this one's been mitigated. This one's been mitigated. This one's been mitigated. This one's been mitigated. This one has been mitigated, right? The one that hasn't been, I mean, they could have gotten rid of these sell positions as they were moving upwards, right? Or they could have taken advantage of these sell positions and actually taken profit once they got down here and, you know, taken some more sell positions. So again, it could be either or. I would be looking at either of these levels. First one I would be looking at would be the top of this candle here, the 137.123 mark. Again, this is the pound versus the yen. That would be the first level I would look at as far as taking a buy position. The second level I would be looking at would be somewhere around here, which would be the 1.36, 0.628 level. All right, so I would say I would see how they will react off of these levels. But I would say these are definitely good positions to consider buy positions. I don't see these going any bearish anytime soon. You can see if we just draw a simple trend line, you know, I think a preschool person can tell you, hey, this is going up, right? I don't see anything telling us it's going back down. Bankers are going to look for the biggest discount they can, especially if it makes a new high, and they're holding positions. They're going to want to sell them at you know, discount prices. And if we want to move this past all the ones that have been mitigated, we can move this here, right? I think this would be the last low that we would have of a price that has been mitigated. And again, what we are looking at is we are looking at this just below the 618 level, around the 71 level. So again, this is a good discounted price for for bankers who have not, yet mitigated, so they can take this much of a loss and still be okay, because they're going to turn around and make this much of a gain. They're going to make the gain from buying this all the way upwards to, well, get this brush going here, buy from here, and then take that. Well, this brush is definitely not wanting to work for me right now, and now it wants to work, and it wants to work in the worst way. But if you buy from here and it doesn't want to work again, buy from here and you get the point. If we take this brush, buy from here, and take this up, that is going to be a bigger profit than if they were to come down to here and get rid of this position, take the loss on between this, 618 and the 785. They're going to take a small loss there, especially to turn around and gain on this position here. So again, think like the banks. That's what I always like to do, and it usually puts me in a better position. So those are my pairs that I'm going to be looking at. I would say also maybe take a look at the U franc. This is another one that could potentially play out quite nicely, especially since could see this on the verge of a reversal. Most of the time it has been sideways. As you can see, we've been going through this sideways channel for quite some time. But if we take a look at the history of it, and I say quite some time as in 2015, we've been going sideways on the franc. But we broke that back in 2015. Right, and then so we've been going sideways ever since. We are at the very, very bottom of the channel. Again, could be a false breakout if we just move this up a little bit. Right, we had just gotten below, which we also did with the dollar. So if we see the dollar turn around and go back up, I believe we're probably going to see the same thing with the franc, the U franc. You could be in a very good position to buy right now for the U franc and take this long, right? I don't think there's any more that's worth mentioning. USD JPY, this is kind of in a weird area, hitting the top of the the resistance right now. Watch that. It probably could make a bounce back and go downwards depending on how the dollar reacts. If the dollar continues to be strong, it could continue to go upwards. I really don't have a good opinion on this. Euro AUD is kind of putting itself in a weird position. I go to the weekly and I go to auto. You can see it's kind of putting itself in a triangle position. So you could see and it's at the top of the channel here. So you could see a sell-off at the Euro AUD. Again, same thing with the Euro USD. You could see a sell-off there, and I have no idea what just happened, but I need to get back that to normal. X out of that. You could see a sell-off down to possibly the trend line and then move upwards. I really don't know what's going on with the franc versus the yen, but you could have a couple different scenarios. You kind of had this triangle. It broke out of the triangle on the opposite side. That was a couple weeks ago, and now we could be taking this long. So if we look at the 4 hour, it did kind of hit where the X marks the spot, moved upwards. If we're going to be looking at, you had this as your major resistance line. It broke above that, came back down just below it. I think more of like a retest, went back above. If anything, you're going to see it continue on this blue trend line. And you could see it could be retesting right now, as far as being this as being the new support level, around 1.11566. Maybe watch that area if you're watching Chef JPY, and especially if I take the fib and I want to Let's see if we move it to something like this. Again, I always think about them as going to something around a discount. I think it would probably be going somewhere around to this area right here, only because that looks like an order block area that has not been mitigated. Just kind of danced around it for a little bit, and I see this area. I have no idea what that was. I see this area as a big order block that has not been mitigated yet. So I could see this potentially coming back down to about the 50 level and then buying from there. But that's pretty much all I've got. That's a lot to try to cram into a session, but if you're going to take my weekly outlook for things, that's what I believe is going to happen, and we will see what happens. All right, guys. That's me. That is my outlook for this week. Again, watch out for the euro. Watch out for the pound. See how the strength of the dollar is going to play out for all of those. Watch for the S&P 500. I didn't have too much to say about NAS. I just think it's going to kind of be stalling, especially with the hearings that we're having in the U.S. With the big tech giants. Strangely, that Jack from Twitter wasn't allowed, but and there were some strange things that happened at that hearing. I watched it, and they had somebody from a subcommittee that a Republican called up, and the Democrats wouldn't allow that person to talk. I found that very odd. They're kind of having arguments back and forth about what tech censorship means. So as far as those big tech companies are concerned, I'm not going to be watching the NAS too much this week, just because I think it's going to be a little bit volatile. So that's what I am going to be watching, and if my words meant anything to you, if you enjoy watching my videos, thank you. Hit the like, subscribe button. I don't have anything fancy going on. I don't have any fancy graphics. Everything I've done myself, and I've just been learning, and hope you guys have been learning too. And we have 20 minutes until market opens. Good luck to everybody. And I mean that in the most serious way. Good luck to everybody. And we'll see if we can't grow our accounts even more. Love you guys, and peace.